We've talked a lot on this channel about PayPal. It's a company that I've contemplated investing long term in pretty heavily. I do have a small position, but what I want to do in this video is just go over an updated analyzing of what price I would be looking to get into PayPal. We're not going to go over the metrics. We're not going to go over the income and the balance sheet. We're not going to go over what the company does. You guys already know all of that. We're just going to take 5 minutes to go through and give an update on some of my assumptions, some historical data, and ultimately where I'm looking to buy PayPal. So let's get into this video. I post a lot of these within our Discord community. So once I go through and I run my analyzing, I will put them within our Discord community. It's completely free. The link is in the description. There's 10,000 members over there. We're constantly helping each other grow and get better. But I usually throw them over there. And one of the things I like to do, if you've never seen me before, is I'm a very conservative investor. I'm somebody who believes truly, and it's worked not only in all of my investments over the past years in the market, but not only in real estate, everything. If the shit numbers make sense, it's a great freaking deal, right? So for me, I'm always conservative because if the bad numbers make sense and it's still a great deal, then that truly means that I'm having an insane deal. So looking at this company over the past year, they've had a 10% revenue growth. On average, for the past 5 years, they've had 15.9% revenue growth, and 10 years is 18%. One thing you guys are going to realize with any company is it's just going to be harder to grow as the company scales. I use Apple as an example every single day, saying that for a company like them to grow 2-3% a year is insane. For a company like my company to grow 2-3% a year is terrible, because we're just a smaller company. It's just the smaller company, the more revenue growth you can see. So let's just look at this and from a conservative estimate, say that on the next 10 years that we would be able to grow on the low side, I would say 5% revenue growth, mid side 10% revenue growth, high side 15% revenue growth. Now, profit margins. For the past 10 years, it's been 14.6, past 5 years, 14.4, past 1 year, 8. So let's just go with a very conservative number of, once again, 5, 10, and 15. Free cash flow sitting around 20 for a very long time. So I'm going to say 15, 20, 25. Because if they've been able to do that consistently for 10 years, have positive free cash flow, I think 20 is a pretty good mid assumption. PE ratio right now, the PE is 37. So let's just say that we have a PE of 20, 25, and let's just say 35, because that's what it's been right now. And price to free cash flow, let's just say it would be somewhere along like 10, and let's do 15, and then let's do 20. So overall, if we look at our desired returns, I want at least 15%. I put this all the time, but my reasoning is because I want to beat the market significantly. If the market's, if I'm making an average, putting my money in SPY at 9%, I need to be able to make double that minimum. So 15% is decently solid for me to like tie my cash up, do the work, research these companies as opposed to just investing in the S&P 500. Now, if we hit the analyze button here, one of the things that you're going to see is that the high and the low are actually different. And the main reason is going to be price to free cash flow. Me sticking price to free cash flow at these numbers is going to be a lot different. Oh, it's because I stuck 15 here. Okay. I'm like, dude, that actually can't make sense. Okay, there we go. All right. So I had 5 instead of 15. I thought it was because I rose price to free cash flow to 20 when I initially wanted to do it to 15. Okay. This makes sense. So looking at these numbers here, high side, if you think the company can do 15% revenue growth a year, 15% profit margins, free cash flow at 25%, PE at 35, the biggest thing, the hardest thing would actually be, and think about this, they have been doing 15% free cash flow for 10 or 15% margins for 15 years. So if they can continue what they've done in the past, those high numbers are actually pretty accurate. And I think the high numbers are pretty actually possible. Now, as far as the rest of these numbers are considered, looking at the mid, to me, this is like, I think they can do this all day. Like, I think that's easy for them. I think that they will very, very, very easily be able to do 10% revenue growth. They'll easily be able to do 10% profit margin, 20% free cash flow, 25 PE. So for me, my real good number would be like 55. So multiple of earnings value would be 55, and then discounted cash flow would be down here at about 81. So where we're trading currently, we're at 73. That's not bad. If you're doing this based off of discounted cash flow, that's a really good number. But for me, 55 is the number that like I'd pull the trigger heavily. But the 80s, I still think we're solid. Like I have been buying PayPal here. I will continue to buy PayPal here. But my biggest thing is from a technical standpoint, if we break like 70 and hold below 70, we're definitely going down to the 50s. So that's why I'm not like 100% buying in. I have about honestly only 20% of the position that I really want, but these are those numbers that I'm watching. Guys, thanks for all the support. Hit the like button, subscribe, check out our Discord community, completely free, link in the description. As always, guys, thanks for all the support, and I'll see you tomorrow. Peace.